Good morning. It's Thursday, the 3rd of November. I'm Steve O'Hare. Welcome to Talking Bull. And we're in for an interesting ride. I think yesterday's headline I put was Whipsaw Wednesday. I didn't realize how true that would be. We're going to dive into the technical analysis on the market soon. Let's first of all grab the headlines and the stories of exactly what went on yesterday. And we can share them now, just giving you a little bit more color of the fundamentals behind the markets. US ADP data recorded an increase of 239,000 in private sector jobs for October, which was above expectations of 195, although there was a small downward revision to the September data. The Federal Reserve increased interest rates as expected by 75 basis points at the latest policy meeting to 4%, which was in line with consensus. And there was a unanimous vote for the decision. According to the statement, recent indicators point to modest growth in spending and production. It added that Fed is highly attentive to inflation risks and it expects further rate hikes will be needed. Chairman Powell retreated that a restrictive policy stance will most likely be needed for some time as demand far outstrips supply and the labour market remains unbalanced. He again warned over against premature easing and that terminal rate needs to be sufficiently restrictive, which is a key question right now. He added that the time to slow the pace of rate hikes could be the December or February meetings, but the data suggests higher rates may be needed that expected at the September meeting, and higher rates are also likely to be needed for longer. So the dollar dipped lower in an immediate reaction to the Fed rate decision, and there was very choppy trading during Powell's press conference. Comments on a higher terminal rate proved decisive, with the dollar posting sharp gains as Treasuries posted sharp losses, with the 10-year yield increasing to 4.1%. The US currency also gained support from a slide in equities, with the currency index at 1-week highs. The Wall Street reacted negatively to Powell's comments on higher rates, with the Nasdaq index posting a sharp decline of 3.4%. So today we've got the Bank of England rate decision. Consensus forecasts are for the Bank of England to increase rates by a further 75 basis points to 3% at Thursday's policy meeting. That's at 12 o'clock UK time. The bank will also release the latest monetary policy report. Forward guidance will be the key element for markets, and the bank is likely to point out that there is a major uncertainty over the outlook. So really is a desperate time from the interest rates perspective. Let's dive into the markets and run through the different markets that we're going to look at, different asset classes. And yeah, by all means, if you want me to cover something slightly different or that I haven't covered, please do mention it on the stream. The TradingView stream is one of the better ways of getting in touch with us. Although we have already got a question. Any thoughts of how the GBP will fluctuate? Yeah, I'd love to have a crystal ball and tell you exactly what's going to happen. I do feel that sterling. Well, let's talk about sterling after we cover the cryptocurrencies and the commodities, and I'll dive into that and my feeling on sterling, because I have got a view. So let's take a look at shorter term chart. Really, let's look at the 4-hour chart. We've sort of got, things have been going roughly sideways for quite a long while now. We have got a potential for a double top formation. We saw price action. This is on a 4-hour chart on Wednesday at 5 o'clock and on last Saturday at 9 o'clock. These two highs that we managed to get. In between, we had a dip down to 20,000. Now, for me, this is a pivotal level, and I'm going to talk about a few pivotal levels in the asset classes that we cover. So for me, 20,000. While we're above there, it's looking quite good for Bitcoin. If we do break below it, I expect to see a flush out all the way down to 18, just above 18,000, down to these previous swing lows. So we'll be back into this mire, this sideways price action we're seeing. If we look at it from a daily chart perspective, we can see evidence of lower highs. Although we got a higher high here, from there, it's still lower and it feels like it's topping out again. So there is a little bit of room for the upside, but it needs to get above 21,000 and hold there and close there on a daily basis. Otherwise, the pressure will remain on Bitcoin. Right, let's take a look at gold. Gold was really interesting yesterday. I mean, look at the price action in that hour following the Fed announcement. A rally right up to 1670, and then a big sell-off. And the dollar had the spike lower and then reacted higher. And further downside is expected in gold now. For me, there's let's take a look at the 4-hour chart again. We've got this area of resistance that's built up since the 11th of October. We've got the highs here at 1684. Above that, we've got resistance at 1730 to 35. So, but really, that's the level of resistance. If we look at the longer term chart, we are at a pivotal level again. As I mentioned, I'm going to mention pivotal quite a few times. So that's what we're seeing here. This swing low that we've respected on multiple occasions historically is now turning into decent resistance. This lines up the potential for a double top formation. We can remove this double bottom formation because it's broken down below these lows. Overall, we've got this double top formation, which I'm going to pop in now. That's the double top formation. The measured move target for this formation, we'll do this, we're using the Fibonacci extension tool. This is pretty quick to do this, he says, doing it very slowly. There's the measured move target all the way down to 1265. Now, I'm not saying we're definitely going there, but there's while we remain below this resistance level now, then I think the odds are to the downside, especially with the dollar really marching on and looking as strong as it's ever done. So I can't see that changing. The talk from the Fed last night was more rate hikes, so further dollar strength. This will impact on oil. This will impact on gold, silver, everything that's all of the raw materials that are priced in dollars. It will impact on that. You can't see the charts. Thanks for the heads up. I had the same issue yesterday. Thanks for noting that. It saved me rewinding and doing it all over again. So let's take a look at this. This is the gold double top potential neckline here, breaking the neckline, measured move target all the way down to 1260. However, for me, one of the key levels in gold is around this 1450 to 1418 level. That'd be a 161.8% fib. Also, we've got 61.8% fib coming in at 1510. We're trading around the 50% Fibonacci retracement level. 1617 is the low. Once we break there, it opens up the downside, no doubt about it. So I am bearish on gold currently and for the medium term. Taking a look at crude oil, this is under pressure. We've had this impulsive move higher from the disaster that occurred in April 2020 when the price of spot crude oil went below zero. And we've had this on this chart, we've got a $10 low here, the impulsive move higher, excuse me. And we've stalled up here and we're getting the correction now. Now this correction could turn into more of an impulsive move. It's just yet to play out. Potential for a double top in the same way. We've got some, let's give you a little bit more of a guide on that. High here, lower high here. Still, you know, it doesn't have to be exactly the same levels when it comes to double tops. There's the break and there's the retest of the neckline. So 92.27 is key for WTI crude oil. It needs to get above there to get back on track on the upside. Otherwise, it's under pressure and it's going lower. So we've seen 3 positive weeks of price action, but there seems to be an overriding selling strategy that seems to be playing out. As we can see, lower highs all the way down, lower highs, lower lows, and now decision time. Support coming in around about the $81 level, and as I say, resistance around about 92.63 on the horizontal side of things. So they're the levels to really watch in there. Dollar index, we can see we've had now 1, 2, 3, 4, 5 positive days of dollar index moving higher from that swing low that we saw on the 27th, and pushing to new highs again. So really targeting a move towards the 113.94 level. Above that, we've got 114.78. They're the sort of key resistance levels above. And we saw basically we saw a pullback of around 50%. Let's get the 50% line on there. Yeah, that's what we saw. 50% retracement of the move from the swing low of 11th of August up to the 28th of September high. So further positive sentiment in the dollar index, and that should impact obviously on euro dollar to a negative side, to the downside. So again, we can see lower highs being posted. It looked like we were trying to form a bit of a bottom here, but if we get a break of 96.35, that's negated, and even more so if we get a break of 95.40. So short-term price action, there's resistance up at the 99.77 to the parity level, the $1, €1 level. That would be the main area of resistance, and until then, we've got short-term support coming in at 97.05, trading at 97.83 currently. Cable, we've talked about this as well before, and how important. It seems like there's a lot of levels missing on my charts this morning, so apologies about that. But how important this 114 level is, and if we go back, we can see all the way back. This goes back to 2007. There are charts that go back, I'm sure, further than that. But there's the level there. Did I actually hit it on the head? There we go. 114. Is that what level is that coming in at? Yeah, 114.12 that comes in at. That was the spike low at the start of the pandemic. We've broken through that and moved aggressively lower. And if we look at this whole formation, it's you can see the real sort of like signs of a head and shoulders formation. All the way up here, head, shoulder here, all the way down. And yeah, it's just further downside. I can't sort of like say any more than that. It's if we take the two swing highs, this one here and this one here, that gives this as a neckline. So that's the real key formation that I'm looking at. So showing a high here of 143.78, 143.80. So say 144. The spike low around 114. The measured move target for this double top formation would be a move down to 85. So that's the real sort of concern for me. We've seen this reaction higher where the UK has sort of like pulled itself together, sort of slightly. But the dollar strength is still there for everyone to see. Dollar leading the way with the interest rate hikes. 4% we're talking about there. And Bank of England looking to move to 3% today. So overall, trying to keep up with the dollar, but eventually it will fail if the rates continue at the same levels. The US will still be ahead. So still under pressure and really looking for, as far as I'm concerned, below the 114 level, I'm bearish. Above it, there is hope for sterling. But at the moment, it looks like we're going to turn this week around with a bearish engulfing candle at the top, which will be a significant dent in the hopes for cable. I hope you can see the charts now, by the way. Let us know if you can. Let's take a look at dollar yen. So shooting star candle, and then followed by last week's doji candle, or dodgy candle, as Taff likes to call them, which I like to call them as well now. And this week also has been indecisive. However, potential for a little bit of upside. We got down. We tested the previous resistance, which now turns into support at 145.30. The bounce back off there. Really looking to target now that 150 level again. Remember, Bank of Japan talking about intervention. So that is what's put a little bit of a spanner in the wheel of this currency pair on the upside. So the upside should be capped with the Bank of Japan intervening, and they're going to use a a number of methods to try and do that. So yeah, that's really covers off the FX as we can see it now. So let's dive into, don't really want to be on the daily chart, but I tell you what, let me get my indices charts up. These will be better. I've got all the drawings on there. I feel a bit more at ease now. So the resistance we highlighted was up at this level yesterday. We got close to taking out the previous day's high, which was 13,445. This is DAX Germany 40. Bearish engulfing candle formed. So this almost looks like a great evening star formation. And although we've got two candles in between, it's still the same price action. So I'd still take it as it's created. You know, we can merge these two candles together and it will give us, you know, a sort of like a shooting star type candle. So this formation, think about the downward trending resistance. So this is a reverse trend line now, and it's provided support on the first effort, 13,100. However, if we do get a break below it, we're back into this this channel area. We're back in below the downtrend. So really key. If we really are to sort of like think about whether this rally higher was sustainable, of course it wasn't. It was too much of a rally, but there's no reason for it not to find support around this area here. But at the moment, I'd be looking maybe if we do get a break in DAX, then we could get a bit of follow through, because the ECB will be under severe pressure as well, and that'll indices I think should move to the downside in the US. FTSE looking negative this morning. That will be dragging the DAX down as well. So really under pressure here. Not a great range this morning, but plenty of time to really sort of like build on that. This is more of another angle on the downward trending resistance. We did close above it last week, but this week we're back down below it. So we can think about redrawing that, but I don't think I will. I'll just leave it where it is, because it just proves that you can break up above trend lines, and that breakup can fail. So it's good to remember that. Similar sort of formation on the weekly on the Dow, the US 30. We got a nice trend line here, broke above it, spiked above it, evening star formation. Here we've seen a slight close above it, which is bullish, but the reversal has really been strong, and we're looking to sort of like this looks pretty negative to me. The reaction from that long-term downward trending resistance line is pretty negative. So I still believe we are in bear territory. Let's draw the same sort of line. This will again, this should show us a little bit of a break. Yeah, we closed above it here, broke back down below it, retested it, didn't get close to retesting it. It feels like the tech sector is definitely bearing the brunt of this sell-off. Earnings not really as great as they have expected. So again, hanging man candle last week, bearish engulfing this week. Doesn't feel like that's got enough time to recover, although never say never in the world of indices at the moment. One of the formations we were looking at for the potential upside was this inverse head and shoulders formation, and now we've got multiple right shoulders, so it could turn into a complex formation. But for me, that is indicating a break of current prices, break of the 108.75 level, and further downside should look to target the 10,400 level. So that's 500 points lower. So be careful with that one. The inverse head and shoulders on the S&P worked a lot better, but didn't get up to where the target was, 4,050, and it's reversed quite aggressively lower, and getting back to potentially retesting the neckline, which I would say for me, although we got a downward sloping neckline, the best indicator would be a break of this, the rally between the head and the right shoulder, and we're below that coming in at 3,766. So really we need to get a break below 3,746 to open up the downside. Needs to hold here really, otherwise further downside is on the cards. So probably covered off most of the markets we normally look at. And yeah, if I think Barrington can't see the chart, just refresh your trading view and you should be able to see it, Barrington. Let's take a look at what we do next, the gun to head. The gun to head challenge is where we pick a trade live on air and we enter short or long, whatever we decide, set a stop and a target with at least a 2-to-1 risk reward ratio, which sounds easy, but it's not easy to stick to that. And then we let it play out during the day. Don't touch it until 9 o'clock. If it hits the target, great. If it hits the stop, not so great. If wherever it closes at 9 o'clock or wherever it's traded at 9 o'clock, we take that as the close. So if it's onside, it's a win. If it's offside, it's a loss, etc. So Joe will be back next week and he'll fill in the sheet. Haven't had a bad week this week so far, but let's see how I got on yesterday. Let's take a look at let's take a look at our ideas yesterday. And WTI crude oil, I thought I was onto a big winner here talking about it, and it took me a while to actually post the trade. So it was down at 88.40 when I actually posted the trade. When I was talking about it on live on air, it was trading at 88.89. Played out, looked really good for one point. I was quite nicely on side. Then we had the oil inventory rally. Then we had the Fed step in, but it did close on side by a fraction at 9 o'clock. So it's not the end of the world. So what am I looking at now? Well, the one market that I'm really sort of, I mean, gold, I sold gold ages ago. I was still short of it. Stops just above. Well, it's at 1676 or something, so I'm short of that. Risk reward on the day isn't great for selling gold. If we break it down to an hourly time frame, we're just heading in to test this support level. So not the best place. You know, you want to be selling just in front of resistance, or you want to be buying just in front of support to get the best risk reward out of it. So there's no risk reward for me there. The crude oil, quite like this because it feels like we've had the inventories out of the way, and I feel there's more dollar strength. So yeah, unless there's any sort of like news bombs dropped by anyone that sort of like impacts on oil, I'm really being helped out by the boys today. Unless there's any news bombs being out, you know, that affect oil that we're going to get coming out, then I feel like it's still a little bit pressured at the moment. For me, there's a nice little formation here, almost like a head and shoulders formation, but not quite. Looks a little bit like the head here, the left shoulder, right shoulder, but the neckline's very muddled indeed. Got a little bit of an opportunity there. Let's take a look at the Forex. That looks, yeah, the dollar's telling me don't mess with me. The dollar looks like it's just going to continue. I wouldn't buy dollar yen because I'm worried about intervention. So Aussie dollar, no, everything feels like it's too late, Stevie. You've missed the boat, mate. When I miss the boat, I always sort of like seem to end up going into Bitcoin and giving it a battering. So let's do that today. Feels like it's had a little bit of a turn. On the hourly chart, we've got a bearish outside candle, very nice indeed. Stop's not far away, and a little bit of a downside there. So let's go with that one. Sorry, Bitcoin lovers, but I have to go with something. So let's have, we're getting short at 20,291. The stop is at 20,391. That's a really tight stop, isn't it? Dear, oh dear. And it's 4-to-1 risk reward. I'm just going to leave it like that. Why would I pick that level? I'm sure we can find a reason for it. No, not really. So let's take a look at what does a 3-to-1 trade look like. 3-to-1, even that is a bit much. 2.5-to-1, that gives me, I'm targeting that swing low there, just above, further than the recent swing low, up to that swing low. So it's not a bad risk reward trade idea now. It still gives us a little bit of something to be interested in. 2.5-to-1 risk reward, selling Bitcoin here, targeting a move to 20,041. So that 20,000 level, as I've said, for me is pivotal. So I'm pleased with that now. 2.5-to-1 risk reward. Hope that makes sense. Let's dive into our final slide, which is the day ahead. 12 o'clock Bank of England policy decision, 3/4 of a basis point, 75 basis points, 0.75%. That's what we're looking for to move to 3%. Anything different to that should lead to additional volatility. Anything more aggressive, good night, Vienna. And also we've got 12:30 US jobless claims. 2 o'clock we got US ISM index manufacturing. So another manufacturing number to look at. Remember, tomorrow we've got plenty of opportunity to get involved. Non-farm Friday, I think it's the worst day ever to trade. It always, for me, it feels like one of those ones that you're set up to lose because of the volatility spike. So anyway, let's see how that Bitcoin trade idea gets on. I'll post that up now, and good luck. Take it easy trading. Be very careful out there. Remember, your risk reward and trade management is key. Thanks very much for joining me today, and I look forward to seeing you tomorrow. And you'll be pleased to know that Joe and Taff are. Oh, Joe might be back tomorrow, actually. I think he's only away till Thursday, so he might be back tomorrow. So very exciting for you all tomorrow. Someone with the right sort of license in charge of the controls. Take it easy.